Hey, it's Michael Saul, but everybody calls me Tiny, and this video is we're jammed up at a key decision point, but can we bust through? This is stock market analysis for the week of March 4th, 2019. Also, I have a stock for you to watch this week. Okay, great. Now that I screwed up the title, if you would like to receive intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow the directions, and you will be on the distribution list. Facebook group is at facebook.com/group/attackthemarkets. If you like what you're hearing, give me a thumbs up and leave a comment to help me move up the ranks in YouTube and to never miss a video when one is uploaded. Hit the subscribe button and smash the bell, and you'll be notified when I upload another video. So let's talk about the key decision point, key decision area, whatever you want to call it, inflection point. It's all good, all right? So we have this horizontal resistance line where we broke down last October. We came up, put in a little pivot, came down, tested it, pushed down, came down, and then we had the waterfall decline. We came up there, and we reversed off of it at the beginning of the week, and then by the end of the week, we were back up there, but with an indecision candle, this doji, which we put in on Friday. So the question now is, are we going to break on through, or are we going to roll it back down from here? I think that we have a better chance of breaking through here than we do rolling down. However, that is what's known as a gun to your head guess. Okay, that is, you got to pick a side, Tiny, so pick a side. Me, these are the perfect patterns where you wait and see which way it goes, and then you get on board that way. Now, how can you do that? You can use a bracket order if you want. You can wait to see if it releases, then pauses, and then get on. Yeah, okay, you're not going to catch the exact start of it. Oh, well. Right? It all depends on your risk tolerance, and I don't know what your risk tolerance is. That's why this is not financial advice, okay? I have no idea what your situation is. I don't know how much money you have. I don't know how much money you're willing to lose, how much money you want to risk on a trade. I have no idea about any of that. And it's more than just the legality of it for me to tell you, hey, guess what? I'm not a licensed advisor. Yeah, great. It's real, okay? I have no idea. You're watching my video. I didn't go over your finances and see how much you have in your account, and you tell me, oh, this is my risk tolerance, and what do you think I should trade? And none of that. So you have to make your own decisions when it comes to that, okay? All I'm doing is giving the analysis. So just remember, whatever you're watching, whatever videos you're watching, whatever newsletters you're reading, and I'm not one of these people that say everybody else sucks and I'm the only one you should listen to. Come on, give me a break. There's no way that's true. There are a lot of good newsletters out there. There's a lot of good people that do videos, and you may read their analysis somewhere else on the interwebs. Great, good for you. But just make sure you understand all the risk involved, all right? Okay, I'm off my soapbox. So here we go. We're coiled up right here under resistance. If we bust out, I think from here, we're just going to go to new all-time highs. I don't see anything holding us up at this point, except maybe the top of this tall red candle, but I think we're just going to make it up there on the S&P. Now, the one thing that I want to point out is the Dow has been leading, and again, if you watch any of my old videos, and you can go back and watch my old videos, they're all up on the YouTubes, right? I've been talking about how the Dow has been leading, and I really don't care because the Dow isn't a leading index. But what I do like to watch is the Dow was out in front, and now all of a sudden it's lagging a little bit. I mean, it's not lagging huge. It's not a huge divergence. But remember what we just saw with the SPY, with the S&P. It was up here at the high from the beginning of the week. Over here, though, it's putting in a little lower high. It's not a shorting signal. I just find it something that I just want to look at. The Dow was out there ahead leading. Now it's not leading anymore. That kind of tilts me to the upside because, okay, the Dow is going into second position now. Here comes the S&P. Here comes the Russell in the same type of position, right, with a little bit lower high. It's not a sell signal, like I said, but notice that it closed over the 200-day moving average. That's great. So it did it last Friday, did it this Friday. It closed over it technically on Monday too, but I mean, it closed so far below the open here, but now it's back above it. So that's a good sign. Here's the mid caps also, right? We talked about this, come back down, test the 200 and get a bounce. That's what it did. And then you got the NASDAQ which looks like the S&P basically closed where it was on Monday for the highs on Monday. Now, I'm watching this for a coil up, and I want to see if we can release to the upside here. The NASDAQ may have a couple of stall points before it gets to the highs. It's not like the S&P where I think it's going to be clear sailing, but I think that the NASDAQ, if it does release from this coil, should see new highs as well. Let's take a look at some of the sectors. Hey, I got the name right this time. I didn't call them indexes. So here's the semiconductors pull back now on the bounce. Let's see if it could keep going. Here's KLA Tanker continuing to move higher. What about NVIDIA? We talked about this one. Yeah, look at NVIDIA also coiling up under this resistance point. Watch to see if it could break, and then to see if it can move out of there. Here's Intel. Looks like a small bull flag. Could pull back from here first, but it does look pretty nice here to see if we can get to higher prices. How about the banks? Let's look at the banks. So the banks are right under the 200-day moving average. I want to see them get above that. Look at Bank of America continuing to coil up. Here's JP Morgan. Here's Citigroup under the 200-day moving average. How about the broker-dealer? We'll look at Goldman, even though Goldman's more of a bank than a broker at this point, but nice consolidation here. See if it could break and go higher. We didn't take really a good look at the broker-dealer. Here's the broker-dealer right here. So it's sitting on top of its 200-day moving average. Here's E-Trade. Right, so E-Trade under the 200-day moving average had a decent day on Friday. Okay, so let's see if it can continue here, maybe take out these highs and head towards the 200-day moving average. What about some of the glamour stocks? Here's Caterpillar sitting on its 200-day moving average. Here's John Deere, not exactly glamour stocks, but I like to look at them. Here's Amazon. Okay, Amazon starting to move out of this coil. Watch the 200-day moving average for potential resistance. Here's Alphabet, nice push over the 200-day moving average, but it really has to clear these early February highs for me to get confident that it's going to start rocking and rolling. How about Netflix? Netflix taking its time here, so not in a rush there. Here's the Zuck book, still coiling up. It had the wedge. It came out of the wedge. Now it came back. So now what we want to do, we want to draw more coils on it here, coil lines on it here. I mean, Facebook really looks like it wants to move one way or the other here. It's below the 200-day moving average, so I can't be biased to the long side, but it's really coiling up. I wouldn't be surprised if there's some sort of news that comes out or something and it either pushes up or down from this, but I mean, this kind of volatility contraction usually is what precedes volatility expansion. How about Tesla? Just too sloppy to bother with. I mean, another, ugly day, at least for the day at least, right? On Friday, just, I don't know. There's better fish to fry, like I like to say. Here's bonds, TLT, if it will come up. There it is. Uh-oh. What's this? No, we're not going to allow that. I don't know why it wants to do that. And that's why it's not working. So let's see TLT again. There we go. Okay, so here's TLT. So bonds, who we were talking about being in this triangle on this coil, it released to the downside. It closed below 200-day moving average. Now, if bonds continue to fall, that could put pressure on the market as well as yields start to rise. But as of right now, it hasn't. So that's a dynamic that we really need to pay attention to here. Again, that's why I want to wait for the release. If the market is going to go higher, I want to see it go higher. I don't want to just guess that it's going to go higher. Unless, of course, I'm doing something with really tight stops. And then, of course, a gap down won't help if that were the case. All right, so I want to see it release first. And then I want to be very vigilant about trailing stops. Nothing saying we're going to new highs here. We're at resistance. So let it break first. That's my opinion. I'm going to let it break first before I make a decision. Here's oil. Yeah, not really doing much. Just kind of sitting there. And here's gold. Wow, so gold got hammered this week. And again, the market, and this is in a lot of these markets, they take the stairway up and the elevator down, or the escalator down. And this was a pretty sharp move to the downside on Friday. This is the GLD. We want to watch 120.82. Let's take a look at the miners. So the miners are coming up to their 50-day moving average. Let's see if they're going to hold there. So before I talk about the stock, once again, I want to reiterate, we are at a key decision area. We're coiled up. I want to see which way we release from here. I'm going to wait to see which way we release, and that's the way I am going to look to get positioned. And on the downside, you have now this 200-day moving average, which we recently broke above, will now be support, right? Old resistance becomes new support when tested, okay? Questions, tiny@attackthemarkets.com, of course. And here is the stock. It is Apple. Yep, real popular one, right? Everybody loves to talk about Apple, but look at this pattern here. Nice range building up here. Come on with the silver light. I don't know why it won't let me do the parallel line, but we'll just have to draw them in twice. Boy, first world problems here, right? So let's see if Apple can get a release with the market, see if it can head up to the 200-day moving average, or if it's going to come back down, maybe test lower range, or maybe break down and head towards the 50-day moving average. But it's starting to get a tight-looking coil here, sideways consolidation. These types of patterns usually do not last, right? You can see something like this, something like this. They usually release one way or the other. So I will be watching Apple this week. Okay, like I said, questions, tiny@attackthemarkets.com. Don't forget to hit subscribe and smash the bell if you want to get notified when I upload a new video. Give me a thumbs up and leave a comment if you like what you heard, so I can move up the ranks in YouTube. I'll talk to you in the intra-week updates or in next week's video. Have a great trading week.